Hello, in this lecture we will define maturity date of note. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of maturity date of note is date when a note's principal and interest are due. When we're talking about the maturity date of a note, we are of course talking about a note, a promissory document from one party to another for future payment because of something that has happened in the past, goods or services being received, or cash. Let's take a look at an example. This note being a bank note, to look at the maturity date, we're saying that we have a note or a loan in this case of the $10,000, and the maturity date would be the time in which that $10,000 is due, both the principal and the interest being due in the future. In this case, we're talking about a simplified form of a note, and notes can take many different forms, meaning we could have a note such as this where we have the $10,000 that is part of the original agreement, and the return is at one particular point in time in which we get the $10,000 principal plus whatever interest, which in this case is the $200. However, we could have other formats of the note, meaning interest could be paid throughout the note term, and the principal could be due at the end, at the maturity date of the note. Or we could have something such as a mortgage type of note, where typically we have both interest and principal that is paid during the payment process.